Hi, this is Lara at Elliott Wave Stock Market with an extra video update for you after the trading session Monday 26th of September has closed. I was expecting downward movement for Monday. The target for it to end though was 2155. We got more than I'd expected. It closed at 2146, 9 points below the target. I'm expecting now 1, 2 or 3 days of choppy overlapping upward movement to end about 2166. When that's done, I'll be expecting another 1 to 3 days of overall downward movement. The midterm target for upward movement to end is at 2233, but it's going to be a choppy overlapping route to get there. This is the main wave count. Both my main and alternate see cycle wave 4 over here within a big bull market at super cycle degree for a big fifth wave. And so this is where a fifth wave within a fifth wave begins. And so we would be expecting to see quite a lot of weakness in this upward movement, and certainly we are. So far within cycle 5, I expect we have an impulse for primary 1, an expanded flat for primary 2, an impulse for primary 3, shows stronger momentum and volume than primary 1, but it's shorter in length than primary 1, and a combination complete now most likely for primary 4. There's a core Elliott wave rule that states a third wave may not be the shortest. That does not mean it has to be the longest. That's a misinterpretation of the rule. Sometimes third waves can be shorter than first waves, and when they are shorter, that limits the following fifth wave to no longer than equality in length with the third, so that the rule is met. In this case, that limit is at 2302.47. It's very likely that primary 4 is over, but it is possible it could continue even further as a very rare triple. The rarity of that structure means the probability is very low, but it is possible. If it does continue, it may not move into wave 1 price territory below 2111.05. Downward movement found support almost perfectly at this lilac trend line, which we've used successfully for resistance previously. Draw it from this previous all-time high at 2134 to this first swing high within this small bear market, extended on out on a semi-log scale. If we do get more downward movement, I'm expecting we will by the end of the week, I will expect again, if price gets that low, to find support at this trend line, but I expect the next pullback may not be that low. Let's have a look at the daily chart, where the end of primary 3 is this point up here, and we have the combination for primary 4, expanded flat, X, zigzag. It's not a completely typical combination in that the second structure in the double ends reasonably below the end of the first, but most of it was a sideways movement. The structure's complete here, and the proportion with primary wave 2 is still pretty good, and a combination is not the same structure as an expanded flat, so there's alternation in depth and structure. If primary 4 is over here, then the limit for primary 5 is at 2302.47, and a reasonable target for it is at 2233, where it would reach 0.618, the length of primary 3. Primary 3 has a 0.618 Fibonacci ratio to primary 1, so if primary 5 exhibits the same ratio to primary 3, that would be really satisfying analytically. There are two structural possibilities for primary 5. It has to be a 5-wave structure. There are only two Elliott wave 5-wave structures, impulses or ending diagonals. I had expected an impulse because that's the most common structure for a fifth wave, but this downward movement now was in what would be first wave price territory, so that idea is eliminated, leaving us with the only other possibility, an ending diagonal, if I've got my analysis of this at the hourly chart level right. Ending diagonals require all of their subwaves to subdivide as zigzags. That's why we have ABC for 1. We need an ABC down for 2, and then a zigzag up for 3, which has to move beyond the end of 1, a zigzag down for 4, which must overlap into 1 price territory, and a final zigzag up for the final fifth wave. A contracting diagonal is more common than expanding, so when we know where 2 has ended, we'll calculate an expected limit, or most likely limit for 3. It's most likely going to be shorter than 1 for a contracting diagonal. Intermediate wave 2 of a diagonal may not move beyond the start of 1, below 2119.12. Let's have a look at how it's unfolding at the hourly chart level, where intermediate wave 1 ends up here. Intermediate 2 may only be a zigzag. So far it looks like we've got a 5 down here, so I'd be expecting a 3 up to last 1 to 3 days, and then another 5 down. Intermediate wave 1 lasted a Fibonacci 8 days, and so intermediate wave 2, in order to have a good proportion to intermediate wave 1, could reasonably be expected to last a Fibonacci 5 in the first instance, or maybe 8 days. So far it's lasted 2 days, so if it continues for at least another 3, it would have a good proportion to intermediate wave 1, and it may exhibit a Fibonacci duration in terms of how many days it lasts. And so I'd be expecting 1 or 2, possibly 3 days of overlapping choppy upward movement for a B wave within the downward zigzag. B waves are the worst. They do not present good trading opportunities. They are choppy and overlapping. There are more than 23 possible corrective structures this B wave may unfold as, and so I'll expect lots of choppy overlapping movement. A most likely place for it to end may be the 0.618 Fibonacci ratio of minor A down at 2166. The 0.382 ratio is also a reasonable expectation if it's going to be more shallow. It can't move beyond the start of A above 2179.58. When it's done, another 5 down for a C wave would complete the zigzag for intermediate 2. There's a common length for second and fourth waves within diagonals. It's between 0.66 to 0.81, the length of the first and third wave. So here that gives a range for intermediate 2 from 2140 to 2131. When we know where B has ended and we know where C begins, then I will calculate a target for C to end that will be within this range using the ratio between A and C. I can't do that today because I don't know where C begins, so I can't calculate a target for it to end. At the weekly chart level, this is an alternate. It's identical to the main up to this point here, with 2 exceptions. The degree of labelling here has moved down 1 degree, and now the fourth wave is looked at as a triangle ending here, with a very short little fifth wave. It's possible from this low to this high that there's a completed 5-wave structure, but from this high to this low, this is not a 5, this is a 3. And so I'm not going to entertain the possibility again at this stage that supercycle 5 and cycle 5 could be over here. I won't move the degree of labelling here up 1 degree and see a huge trend change here, because if there's been a very big trend change, then we should be seeing a 5-wave structure in the direction of the new trend, and we haven't. We've only got a 3. And so that's possible. It could be a leading diagonal unfolding, but it's very unlikely. And so if we have a 5-wave structure complete up here, then we'd be expecting a correction to the downside for a second wave. It may be unfolding as a double zigzag. Let's have a look at this at the daily chart level, where the end of primary 1 up here. So within primary 1, the subdivisions are identical to the main wave count up to this point here, except this is all labelled 1 degree lower. And now what if the fourth wave was a triangle, a running contracting triangle complete here, and the fifth wave was very, very short and quick? This is possible. Intermediate wave 4 has affected a net retracement of intermediate wave 3, but it's only half a point. That does really somewhat reduce the probability of this alternate, but it is possible. All Elliott wave rules are met, the subdivisions all fit quite nicely. If we have a 5-wave structure complete up here, then primary wave 2 looks like it most likely would be a double zigzag. The first zigzag in the double is too brief and shallow to be a whole completed correction for primary 2. The double is now joined by a 3 in the opposite direction, so this wave count would be expecting a 5-3-5 zigzag to end substantially below the end of the first, to deepen the correction and achieve the purpose for the second zigzag in a double, and also to take up more time. The 0.382 Fibonacci ratio would be a reasonable expectation for this one, about 2038. Intermediate wave Y should look like an obvious 3-wave structure, and so the B wave within it should be choppy and overlapping and have some green candlesticks in there like this one did in here. Let's look at this at the hourly chart level, where intermediate wave X is this high up here, and so again would be expecting a 5-3-5 down. I expect that the A wave's not over here. This is probably only wave 1 within wave A. For this alternate, 1, 2, 3, and A, B, C for a zigzag subdivide in exactly the same way, so there's no divergence between this idea and the main wave count for the short term in terms of subdivisions or direction or the invalidation point. At the weekly chart level, at the end of last week, we had a green weekly candlestick which came on lighter volume. That suggests that the rise in price is not supported by volume. But to see what's happening more clearly, we need to look inside that week at daily volume bars. At the weekly chart level, it looks like price has bounced off quite strongly from this trend line drawn from the previous all-time high at 2134 to this swing high here and extended it on out. And that's perfectly where downward movement found support. Because last week came with a decline in volume, it's reasonable to expect some downward movement this week as a reaction. On balance volume at the weekly chart level gave a bullish signal when it bounced up from this trend line and moved up and away. At the end of last week, there was some bearish divergence between price and on-balance volume, but recently on-balance volume has been working better with trend lines than it has with divergence, and so I'm not going to give too much weight to that divergence. It would suggest some downward movement to follow it, and so far that's what we're getting. RSI is not extreme at the weekly chart level and exhibits no divergence between price to indicate weakness, so there's plenty of room for price to rise or fall. At the daily chart level now, let's make that a lot bigger. We've got 2 days of downward movement, importantly coming on lighter and now declining volume. The downward day for Monday has got slightly lighter volume than Friday, so the fall in price is not supported by volume, and volume for these days is weaker than the prior upward days. So it's reasonable to expect that we've probably got the end of downward movement, at least for the short term here. It's reasonable to expect a green daily candlestick for Tuesday's session. So far that method has been working fairly well at this stage for this market. ADX for Monday's session is declining, telling us that the market is not trending. ATR is overall flat to declining at the moment, so it's an agreement, and Bollinger Bands have widened, but now they're steady, telling us that there's no increase in volatility, and so it's reasonable to expect again that the market is consolidating, it's not trending, or at least that these 2 downward days are a counter trend movement if we do have a new trend developing. On balance volume gave a bullish signal. It's not a strong signal though, because this purple trend line is quite steeply sloped, but it is reasonably long held and it has been repeatedly tested. So here's a bullish signal. On balance volume is coming down now and it's finding support at this purple line. This may help to stop the fall in price here, and so this too suggests that for Tuesday we're probably going to see a green daily candlestick, and that all fits quite nicely with the short-term picture for the Elliott wave count that expects some upward movement for a little B wave. RSI is still pretty close to neutral and at the daily chart level does not exhibit divergence with price, plenty of room for price to rise or fall. If the market is still consolidating as ADX, ATR and Bollinger Bands suggest it is, then we'd expect overall a continuation of an upward swing, only to end when stochastics reaches in or very close to overbought and price reaches resistance. Here stochastics didn't quite reach overbought, price did reach resistance and turned down from there. We've got final support about 2120, and so now a continuation of an upward swing overall would be a reasonable expectation until stochastics gets closer to overbought and price gets closer to resistance about 2190. Let's have a look at VIX and see if there's any divergence today. I'm noting bearish divergence in blue and bullish divergence in yellow. For the short term, over a few days to a couple of weeks or so, this divergence between price and VIX is working most of the time to indicate the following direction for 1 or 2 days only. At this stage, I'm not noting any divergence between inverted VIX and price. Price has got a higher low here to this point here, and so has inverted VIX. So there's no divergence to indicate weakness, to indicate the direction for the next couple of days. With the AD line also, we had some bearish divergence here And then, so we were expecting 1 or 2 days of downward movement to follow it. We've got 2 days of downward movement now, and so that divergence, if this pattern is continuing, should be now resolved. I'd expect that's it, and now we're probably going to get upward movement for Tuesday's session. That too agrees with the Elliott wave count. So all in all, I'm expecting an upward day, a green candlestick for Tuesday. That's all from me with your S&P analysis, and I hope all our members had a fabulous weekend.